Welcome back to the channel, guys. My name is Jess. So Bitcoin really does not seem to be able to catch a break lately. Hurdle after hurdle has been suppressing the price, and the most recent bout of economic news has caused the price to crash 5% overnight, right after re-establishing a key level of support at $63,000. The price is now back down at a macro level of support at 60K, catching a lot of people off guard. So let's dive into the video today to talk about what kind of levels we need to see for a definitive macro bullish breakthrough, as well as what it means if we break below $60,000. Before we get into all that though, make sure you guys like and subscribe to the channel for regular Bitcoin analysis every Wednesday and Saturday, and ring that notification button so you never miss an episode. If you want even more content, be sure to check out the free Telegram channel where you guys can get daily Bitcoin updates as well as crypto and economic news. If you're interested in my VIP channel, you can check out more details over here. VIP gives you exclusive access to my personal trades, at least 3 of them a week, fully justified with exact entry points, targets, and stop losses. Today is also the end of the trading month for April, so new results will be coming out tonight, as well as the start of the 48-hour membership sale where you can get up to 30% off all your memberships. Alrighty guys, so as per usual, let's start off by going over what on earth has happened in the last couple of days and since my last video. So in our very last video on the short time frame, things were not looking good at all. There was a very high likelihood of a breakdown from this formation of a head and shoulders pattern. So that's pretty much exactly what we saw. We saw a breakdown of the neckline of support here at $62.8 thousand or $63,000, and the move took us right down to the full measured move of the head and shoulder pattern, all the way down here to 60,700, right? So that is the top of our high time frame base of support. If we zoom out onto a 4-hour or a 12-hour chart, you can see that 60.8 or 60.7 is that key high time frame area of support, or where that support begins, and that was where we ended up bouncing from. So immediately after the bounce, it was a pretty strong bounce. We moved right back up to test that neckline of resistance, right? Newly founded resistance at $63,000. But before we even managed to really establish it as a base of support and move back up to test this local high at $65,000, we saw a massive drop. So this 1-hour candle here, that was a 3.7% drop for Bitcoin at midnight last night. So let's go into this most recent segment of price action over here. Let's talk about what it means, what we need to see for a macro continuation upwards, and what's going to invalidate this entire breakout over here, this entire positive move, and bring us back below these levels. Before we get into any more analysis, guys, let's hear a quick word from our sponsor, Bitunix. Bitunix is an emerging cryptocurrency exchange committed to providing you with a secure, convenient, and highly functional trading and investment platform. Available across all countries as a non-KYC exchange, get global access to over 150 trading pairs with minimal fees on both spot and futures contracts. Join today to get $5,500 US in sign-up rewards and get 15% off all of your trading fees by signing up using the link in my bio or by using the code 1GG3 when you create your account. So at 12 AM last night, we actually had some very bearish economic data come out. So I don't know if you guys have heard of it, because I actually hadn't heard of it until this morning when I woke up and I saw this crash and I had to like figure out why it happened. But it's basically called the Michigan Consumer Sentiment, and it just measures how people are feeling about the economy. So inflation, interest rates, unemployment, all that kind of stuff. And it came out more bearish than it has in the last 3 years. And keep in mind, we also have CPI data coming out in 4 days on the 15th of May. We've got core inflation data, CPI data, all that kind of stuff. So the market is just really sensitive to that kind of news right now, and had a very negative reaction to last night's consumer sentiment data, right? Even the asset markets, the whole asset market, S&P 500 included, had a pretty steep drop at midnight. Obviously not as much as Bitcoin's going to drop, because Bitcoin just tends to be a lot more volatile, but we saw a 0.5% drop for S&P 500, and as you can see, Bitcoin dropped a fair bit. So the price continued to trickle downwards for the rest of the night, and we ended up bouncing down at $60,000. So if we zoom in a little bit to the 5-minute time frame, we can see that on the short time frame, we are starting to recover a bit. We are developing some short time frame uptrends. And if we take a look at market cipher B as well, it looks like we have printed some bearish exhaustion. So for the time being, the price does look like it's going to recover, and we shouldn't be going lower than $60,000 on the short time frame. So obviously this drop was pretty devastating, and it did come mostly out of the blue, right? I've never heard of the Michigan Consumer Sentiment. Maybe I've just been living under a rock, but I hadn't actually heard of it before, and I haven't actually seen it have such a huge impact on the market before. But regardless, it happened. And while it was an unfortunate move, particularly since we had such a strong bounce from 60,700 and we had only just established 63 as a base of support, if we actually zoom out and take a look at the charts on a higher time frame, say the 12-hour time frame, the daily time frame, overall, guys, the price action is still looking really, really bullish, right? If we take into account the price action over the last month and a half compared to the price action right now, we're still in an upwards trajectory for literally like the first time in a month, right? Or a month and a half even. We are forming, right after this bounce from $60,000, we're forming our first higher low, right, with our local low being that $57,000 level, right? A bounce from $60,000 is still higher than that. So we are potentially seeing a formation of a new high time frame upwards trajectory, right? In comparison to this, month and a half long or like 2-month long downtrend that we were recently in. This is for the first time that we're forming a high low on the chart. So in terms of the macro scenario, the only way we're really going to see some bearish validation or a continuation lower, despite all the recent volatility and despite all the recent drops, the only way we're going to get confirmation of that is if we fall below $60,000 here, we go back into this high time frame downtrend and we lose 57, because losing 57, we're confirming that downtrend and we're continuing our formation of lower lows, right? But that is not what we're seeing right now, guys. We are still forming the higher bounce, even though originally we thought that bounce was going to be at 60,700, this first initial, boost upwards here. We're just seeing at 60,000. There's really not much change in terms of the macro charts. Obviously, it just has been very volatile, and we want to know right now on the short time frame how to identify, those trigger points for a continuation upwards. So let's move on to the short time frame and talk about that. So on the short time frame charts, we do have a couple key levels of resistance to be looking out for that sit above our key level of support. So the very first one that we're looking for is 61.5 to 61.7. So this range of resistance here. We can see historically just on the short time frame charts, every single time we get that hourly candle close above this level of resistance, we end up shooting right up to test this neckline over here at $63,000, right? And so that is the first level of short time frame support resistance flip that we're kind of looking to get. And then beyond that, in order to confirm a short time frame bullish trajectory or reestablish the bullish trajectory on the short time frame, is a break above our local high here at 63,400. Now, the reason why I say that is because what we're really concerned about right now is the potential formation of, continuous, lower, high, a continuous lower high trajectory, so that downtrend. So we're trying to avoid that, because eventually, if that happens, if the short time frame downtrend pushes us below $60,000, we have a higher chance of losing our macro levels of support and going lower, right? So obviously on the short time frame, what we're really looking for is an immediate invalidation of that in our next move. So an establishment of support here at 61.7 and then a push above 63.4, that local high level. So in that move, to confirm a macro trajectory upwards would be a break above our high here at $65.5 thousand. So if you guys remember my last video or any sort of video before that, on the high time frame charts, $65.5 thousand is the base of resistance on the macro charts. So we're on a weekly chart here. We can see the weekly candle close for the prior all-time high in 2021 was $65.5 thousand. So it is a very key, strong, high time frame level of resistance. And entering above 65.5, we have the potential to start to consolidate within this macro range. And that tells us that we will travel between 65.5 and 69, right? And traveling above 65.5 also means, if we zoom out a little bit onto this chart, that we have a high likelihood of breaking above the midline of our huge channel of consolidation, right? That's $67,000 midline over here, right? And that takes us into these upper ranges over here. Okay, so in terms of the short time frame levels of resistance, they do have some distinctions. So obviously that very first level, or that range of resistance at 61.5, that's a key support to establish in terms of a move above here to invalidate the short time frame downtrend. Then to confirm a high time frame uptrend, we'd like to break above 65.5 and $67,000. Alrighty guys, that is it for the analysis for today. So if you were to take away one thing, it would just be to zoom out, because while the short time frame charts are looking a little bit sketchy, the high time frame is still looking quite good. And if you don't want to do that and you want to stick to the short time frame, well, now you know all the key levels to be looking out for and what they mean. If you enjoyed the video today or you learned something, don't forget to like and subscribe to the channel down below, and join my free Telegram channel for daily Bitcoin updates as well as crypto and economic news. If you're interested in my VIP channel, you can get more details over here. VIP gives you exclusive access to my personal trade setups, at least 3 of them a week, fully justified with exact entry points, targets, and stop losses. The results for the trading month of April will be coming out tonight, as well as the start of a 48-hour membership sale where you can get up to 30% off your memberships. If you are a trader, don't forget to check out Bitunix down below and sign up to get up to $5,500 in rewards and 15% off all your trading fees. Hope you guys have a really great week, and I'll see you next time. Bye!